a normal, and every time the growth falters, the bond yields tend to rally because you expect the Fed or the central bank to cut the rates. But that is when inflation is not a problem. This time around, even today, for example, now, I mean, let's keep India out of this. And if you just look at the US and if you look at the estimates for inflation, if you look at the CPI estimates for December, they are running at 7%. If you look at the normal PCE, which is the variable that Fed looks at while framing the monetary policy, that is expected to 5.1%. Now, assume that you run 3 months out, and if you believe that the growth is going to falter, it is faltering in the developed markets, and then the inflation is at 6%, 7%, how will the Fed cut the rates? How will Fed change the pivot? I'm not very sure. And therefore, I believe that the markets, global markets, are running ahead of themselves in terms of trying to assume that the Fed will react to slowing growth and inflation is no longer a problem. I suspect that once you start getting inflation prints, this could very quickly reverse. In this setup, India stands out. You actually want a situation where there are global growth concerns, inflation is a problem, and that caps the commodity prices. The only thing that goes against India, if you are worried about what happens to oil and commodities, which I believe in the current setup should not be a problem. I hope that answers your question.
Nirav, that's a very interesting take. First of all, let me tell you, Goldman, just a while back has come out with a note which resonates with something which you just said, that world equities may be running ahead of themselves in jumping to the conclusion that inflation may moderate very meaningfully and all of that. So there is a thought which is now emerging because the rally has been very furious, 15% rebound from recent close, one of the best months. Let's talk about the other part of your equation, which you're saying that India may stand out. Now, we are speaking to one section of though they are in minority, who are saying that the quality of earnings of Indian markets, the corporates, the way Indian corporates, both listed and unlisted, have navigated slowdown, even COVID, there is a very strong case for a divergent direction Indian markets could take. One, because its dependence on FIIs have gone down, and some India dedicated FIIs may come because now people don't want to bunch up their investments along with China. So ex-China funds are starting off. Do you see, let's scratch that point a little more. Next 3 to 5 years, can India decouple and perform on its own away from West?
Well, it's a very interesting question, and however we may wish that we'll decouple in a sense that, if US goes up by 10%, we'll probably go up by 15%. Or when the US falls by 10%, we'll fall by 5%. But I believe that, we are part of that system, a big buyer of that theory. Now, when I said that India stands out, I'm very surprised at the resilience of the Indian economy. So, I mean, just look at the PMI figures for the services and manufacturing and the core sector growth rate, the real estate. So, all the high frequency indicators are doing extremely well, right? So, I think we've managed the economy beautifully. I mean, and this is hindsight 2020 analysis, but the right amount of stimulation during the pandemic, we did not go overboard, which means that our inflation is actually running lower than that of developed markets, right? So we've done a beautiful job. And this despite the fact that food accounts for 40% of my weights, which means that you may not necessarily have to be as aggressive in terms of raising the rates, which means that India actually stands out in terms of assuming that you can actually have a soft landing. So our constructive view on markets in India essentially comes from a rather constructive view on the economy itself. And I think after a long time, we are seeing lot of the pillars in sync, in a sense that real estate is doing well, the government capex, the state government capex, and finally the corporate capex. Right. So the investment seems to be picking up. Credit growth, which is the most important barometer, a leading indicator in terms of how the economy does, is sort of trending in the right direction. Uh, yeah, so I think you can only argue that maybe the valuations are probably in fair territory, maybe slightly ahead of the story. If you take a 2 3 year perspective, I think some serious money will be made in the Indian markets. And yeah, coming back to your other question in terms of China, I think the economic takes a back seat, and you're more worried about the business continuation and stuff like that. And again, I mean, you're talking about you need to replace large markets, right? So it can't be done with some pony tiger economy. You need an elephant economy, which India stands out. So I think if we play our cards well, and when I say that, look at the PLI template that's been done extremely well. So we have got a very good setup for macroeconomy and therefore for the markets as well, Ajay.
Nirav, how are you recommending positioning the portfolios right now, given the way data is coming, be it credit growth, auto sales, or any other?
Yeah, so in a nutshell, if I take a top-down view, then we are looking at domestic big theme is that it is time to go wide in Indian markets, which means that unlike consensus, we are bullish on the mid cap and the small cap sectors. They have corrected significantly. The valuations are now below those of large caps, and the breadth of investment opportunities is significant. Yeah. So broadly, domestic oriented sectors till the time we get more clarity.
Right. Nirav, I'm tempted to ask you about financials as a space because it's like a very clear bet on recovery of the Indian market. FIs have sold it off this entire year. Results have been good. Credit growth is coming back. But if I were to look at the beyond the top cream, ICICI, Axis, HDFC, beyond that cream, to the way, say, IDFC First Bank gave out number this time, how there's a turnaround being attempted at Yes Bank, Aditya Puri may be joined the board. So this mid-tier banks, Bandhan is saying my worst is over. Would you look at this space?
Absolutely. So I am a great believer that like you said, if you just remove the top 3 4 companies which essentially stand out because of very strong liability franchise, which means that they don't have to take excessive risk for a given level of ROE. But India, when you look at the asset side, it offers ample opportunities for you to create asset franchises even when you don't have strong liability franchises, right? So I mean, at across the risk return spectrum, you can have an ROE, you can build an ROE tree. Yeah. So and I think one of the things that we've been debating internally is that it is not it is almost unthinkable that we have completely cut down on risk, right? So we meet a lot of the mid cap companies, small cap companies, and we've got a different spectrum in terms of risk, right? So if you just look at the banks and just look at the disbursements, and 80-90% of the disbursements are above A or above double A. How many double A companies are there in the country, right? So I think now I believe that as we start seeing a pickup in the growth, the animal spirits will start coming back. That's completely absent in the last 8-10 years. Balance sheets are in a fantastic shape. Most of the banks are very well capitalized, including some of the top tier PSU banks. And I believe that a lot of the alpha is going to be made outside the top three banks, and it has been playing out in some fashion, right? HFC Bank has not gone anywhere. You've seen over the last 1.5 years the rally being led by SSCI Bank, and I think a lot of the banks are going to come back. You're just seeing how strong rebound was there in IndusInd Bank, right? I think it's up some 20-25% after the results, because they're knocked down to below book values on headline news rather than the numbers. We are seeing some momentum in RBL Bank. The numbers were okay, and market was very, very apprehensive getting into the results. Yeah, so we are very excited about the space.
All right, Neerav, thanks so much for chatting up today. We spoke after a long time. Good to have you on the show. And I will
Pleasure, Ajay.
catch you again one of these days on our